Hello, hello everyone, and here we are for October 8th, 2019, winners and losers. TLT struggles to 53%, regaining some profit. And let's go to the chart. There we are. So TLT had a struggling bit. It came down. Here's our close, and here's our close. And candlesticks, when you have a red, that's the closes on the bottom. When you have the green, the closes on the top. So there we are. This was at 68% here. This is 53%. 15% difference between the two. The bottom line is we're still holding on to some profit at 242 with a minus 105 indebtedness. There are no exits today, no exits. So let's move on to our next holder, and IYR. And there it is. There's YIR. Now YIR owes us, hopefully the tag will come up soon. Give me an idea without having me go to my spreadsheet. Looks like I'm going to have to go to my spreadsheet. Give me oh, there it is, 473. We're still hovering in that 200 more or less. So it is what it is, and there's no movement. We're still stuck in long defense down here. What a pity. All right, let's go on here now. Our next, now in the loser side of the Tigers, and running into this data thing. If anybody knows what's going on, I've talked to Thinkorswim and say this not in their end, but guess what? My daughter and I were doing a session Sunday morning, and she had the same problem. So, who knows? Maybe they by cutting commissions, they also cut back somewhere else to make up for the loss of commission. So let's go ahead and take a pause until this data. Oh, there it is. Cool. Very, very cool. All right. It owes 442. It's down $74. It's a funny close. Closed here, then it closes here. Oh, again. This is the danger. I'm glad this is happening, because we are so accustomed of doing uptrend stuff, and now we're looking at, I'm adjusting down here. The lower panel is the volume, and apparently I've lost control of the volume. Great, nice going, Thinkorswim. Well, as we got moving average, we got the ATR. Okay, let me see if I can resume it. Okay, that will work. Let's continue. All right, so yeah, I do want it to go this direction. You see it right there. Add put, 2 puts. I got 2 puts in play. Add in Dominion. So yeah, I do want it to go down. We have a 442. We're 74. Not too bad. 5. Let's see, 516. Sure, we're behind 516, and we got till February to make this happen. All right. Hopefully, a lot of people use electricity during Christmas. Yay! Holidays are coming up. We're going to be spending a lot of energy in all kinds of ways, and electricity will be one of them. All right, moving into now Dominion, who is our next holder, and it's also a call. My strategy I call here is the hawk. It's a put hawk, and loss leaders are 21 to 20, and we Tigers are at 382, and $80. Yeah, so we're in the $400, $450, $400 range. All right, that said, coming into the final turn, Pepsi, and Pepsi is a call. Yeah, we have a call here, 488, and it's down 123 at 25%. Our stop is here at 50%, 215. So we'll hold it out, see what happens, and that's about all we can do. All right, moving over to the Alpha League. Yes, Alpha. Here comes Alpha, and Alpha is got one small winner. Yeah, isn't that something? And it happens to be Walgreen, but it's Walgreen as a put. A put is we're looking for the action to go down. It was $5.95. It made $27, moving in the right direction, and it's a put. Understand that stocks have a tendency to rise slowly and fall down fast. One of the terms that's used in trade schools is stocks take the stairs going up and takes the elevator going down. So if we're into this correction situation zone, let it go. But for us, it's good because everything is that we are on a put side. So we want this elevator to go down. Yeah. We want it to go down, all the way down here. Give me back my 595. Retire Walgreen off the losers list and get into the winner circle. All right, let's go deal with the losers. Oh my goodness, Nike had such great potential. It's like, let's just do the numbers and plan our trade and keep to the plan. So here's Nike. Nike, oh, this is interesting. Nike had a up. Okay, I didn't realize how old. Yeah. Do you see this? It closed here yesterday. It closes here today. Was that a gain? No. The problem with candlesticks is that it's a daily thing, not a day-to-day connection. Essentially, this should have been a red. If you're doing it to do close to close, this would be considered a red candle, because why that closed there and then the close would have been here. But how they do that, I don't know. And that's the way it is. If someone has an idea, that's all for you. I'm only trying to show you what I know, and hopefully you guys will learn something from it to do something on your own. All right, let's go to XLK. And remember, XLK is shooting for the loss leader. There's a loss leader here that's owe us some money. XLK, we're in a call zone. Real funny action down here, like the jalopy we saw earlier. Here we go. The jalopy we saw earlier in T minus the last couple of weeks. Look at this. The MACD. It's like, wow, it can't get itself together either. We are at a long distance stop, so there's nothing we can do about that. We are shooting for the 268, and we are behind 643. Now remember, this is the larger account. This account has lots of contracts, whereas you saw in Tigers, it's like 1 or 2 contracts at the most. We are here in the 5, 7, 9, 9, 6, 13. So you see, now why is that? Well, the reason is because the more contracts, the more opportunity you have, providing it goes in the right direction. So if we're looking for 268 and we're short on the current trade at 643, and we have 9 contracts, which makes 900, we need a $1.02 movement to go up. Now, how do we calculate that? Well, let's go all the way to the options chain and get the delta. We just grab rule of thumb. Rule of thumb, delta 50. It's ballpark 202. So here the close was at 78.74. So we'll add 78.74, and we need to reach a price of approximately 876. 876 is the price that we need to be able to get to go from the current position that we are here up. So the close is here. We're looking for 876. Oh wow, look at that! It's exactly $2. So $2. It's a $2 difference, and the ATR is $1.36. So we take $1.36, which is the average travel between open and close, and we're looking at 1.5 days. So if this is able to get out of its doldrums, get it over with, and then get back on the road to recovery, we have a shot. I mean, we're only looking for 80. We're looking for it right there. Our anticipated option. Now, nothing's guaranteed. This is all pretty much algebra and numbers, but the market will do what it's doing, and then the market makers in their little black boxes of how they set the values to the options is totally beyond our control. All we can do is the best is be there when it happens. All right. Well, let's get on down here. Time's running, the clock's running, and now we're at PG. PG has the same kind of pattern that XLK had. It is a call. It's 867, and it's behind 759, and it's 6 contracts. And remember, an options contract is 6 times 100, which makes it 600 shares. 600 shares divides into these numbers, and that gives you that approximity. We'll do the exercise tomorrow again. I don't like to do too many exercises in one sitting because I don't want to overwhelm you guys. I really want to be able to, okay, what was the focus of today's winners and losers? How did we do? what did we do wrong, and what can we do better, and what is the anticipation of what we're going to try to get to. All right, that said, we'll go on to our last one. Here's our last two, is quad. And there's quad, and quad is really funny. Look at this. Doji, doji, doji. Now, what's a doji? A doji is that the market can't decide which direction it wants to go. It doesn't know if it wants to break down and go through here or what. But this is encouraging. Look down here. I have my MACD on Thinkorswim set up that I can see the trend of the changing of the MACD. And see here, this, when it's red, that means this was deeper than that one. This is green. This is higher than the one day before. Also, too, the MACD is starting to flatten down. With the MACD flattened down, we just might be looking at an opportunity here. Okay, so that's for quad. Let's go over to XLV. And there it is, XLV. And here we are. Another jalopy looking MACD. It's really strange. 410, 10 contracts, and we're at 1580 negative on the current trade. So two combined makes it 1990. 1990 times divided by 10 contracts, which comes out to 1,000. So we're looking at 1990. We're looking at about a dollar move. That's all we're looking for. We need a dollar move from here to here in the option to overcome that and get that back. And what does the tea leaf say? Well, we got jalopiness down here. We have a stochastic that can't decide which of the two poles it wants to move to, and we're sitting at a 870. We're sitting right here on long defense. That's our long defense line. Well, that kind of wraps it up for today's losers and winners. I thank you very much for checking it out. And trade smart, trade strong, and trade well. Catch you tomorrow. Bye-bye.